All right, welcome to The Explainer. Today we are diving deep into something huge, a potential $45 billion monthly cash injection from the US Federal Reserve. We're going to break down what this could mean for your investments, especially for assets like Bitcoin. And let me tell you, this isn't just a minor tweak. It could be a total game changer for the entire market.
Okay, let's get right into it. The big question on everyone's mind is why? After months of tightening things up, why on earth would the Fed suddenly slam the brakes and reverse course?
So, to really get what's about to happen, you gotta understand the mess the Fed is trying to clean up. The system is definitely starting to show some serious signs of stress. For a while now, the Fed has been deep into what's called quantitative tightening, or QT. Basically, they've been turning off the money spigot, making cash harder to come by. The idea was to fight inflation, right? But, well, it's had some pretty major side effects. Well, that policy has officially hit a snag, a big one. There's just not enough cash or liquidity to keep the gears turning smoothly. Think of the financial market like a massive plumbing system. The repo market is this super critical pipe where banks lend to each other overnight. And right now, that pipe is getting seriously clogged up. And this quote right here, it perfectly captures the vibe on Wall Street. This analysis from Matrixport shows that everyone is walking on eggshells. They're basically saying any little rally is going to get sold off immediately because traders are just trying to play it safe. Nobody wants to be the last one holding the bag. Okay, so the market's teetering on the edge. What's the fix? Well, this is where the surprise comes in. And believe me, it is a big one. It looks like the Fed might be about to pull a rabbit out of its hat. Now, when Mark Cababana from Bank of America speaks, people listen, and for good reason. He's the guy who nailed the prediction for the end of the last tightening cycle. And now, he's forecasting another huge policy shift. His exact words? Expect fireworks. And these are the fireworks he's talking about. The prediction is that the Fed is about to start pumping a staggering $45 billion back into the system. And now that's not a one-time deal. We are talking $45 billion every single month. So what is this thing really? Well, everyone's calling it QE light, like a light version of quantitative easing. The Fed is going to be buying up US Treasury bills, which pumps cash directly into bank reserves. The whole goal is to get those reserves back to a healthy, or as they call it, abundant level. This is a massive pivot. Okay, so we've got this massive wave of cash about to hit the system. You'd think that's a straight shot up for assets like Bitcoin, right? Well, not so fast. What the data's showing us is a total paradox, a real head-scratcher playing out as we speak. So on one side of the coin, you've got the short-term traders, the gamblers, the folks making risky, leveraged bets, and they've pretty much packed up and gone home. Their appetite for risk has just vanished. I mean, just look at these numbers. Open interest, that's the number of bets out there, it's way down. Funding rates, what it costs to stay in a positive bet, also down. And get this, the premium traders were willing to pay to bet on price hikes has plummeted by 75%. The signal couldn't be clearer. Speculators are out. But here's where it gets really interesting. While the little guys are running for the hills, the big fish, the institutions, they're doing the complete opposite. They are buying in, and they're buying in big time. And this chart just says it all. A recent CoinShares report shows over $700 million flowed into digital asset funds in just 1 week. And look at the biggest piece of that pie. Over $350 million poured straight into Bitcoin. That is not your average trader, folks. That is serious big money confidence. All right, so let's put the pieces together. We've got the speculators leaving, the institutions piling in, and the Fed getting ready to turn on the money hose. So, what in the world happens next? This is really the million-dollar question for anyone with skin in the game right now, isn't it? Which side is going to win out? Will the nervous speculators keep a lid on things, or will that flood of new Fed money and institutional buying send prices soaring? It really is a massive tug-of-war. On one side, you've got these huge positive forces, that Fed cash injection, the US Treasury spending again, and even the fact that so many speculators are out could lead to a huge price squeeze. But on the other side, you've got wild cards like the Bank of Japan and just a general feeling of caution still lingering in the air. So what's the bottom line here? When you weigh everything, a lot of analysts are betting that this new liquidity from the Fed is going to be the tiebreaker. It could be that powerful tailwind that just overwhelms all the uncertainty and gives risk assets like Bitcoin the fuel they need to really take off. Which leaves us with the one big, provocative question. With the speculators gone and big money moving in just as the Fed opens the floodgates, could this be the start of the next major bull rally? If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. More news in our Telegram channel in the first comment. See you next time.